and evening to you all, wherever you are joining me at this hour. Welcome to 549 edition of Invest Data Trading Academy Live with Ambrose. Here, this is the first food trading week for the first in the month of October, and I'll tell you that this full week we now see how the market is going to perform. But actually, market is open positively in most of the market across the globe, and also if you look at African market, the same trend we are seeing market looking up to usher in the last quarter of 2025. Good news that yes, most of the mature market are also looking green as we speak, and also it's a good news for the market. If you look for start from Asia market, let's look at what is happening there. I'll tell you that Asian stocks or market are in green, and we can see despite some missed macro data, we are seeing that buyers sentiment is up in Asia market, but since that Japan market is already leading as a result of what the new prime minister that was appointed or voted for recently, and that also boosted world confidence in that domain. That means political upheaval or political crisis uncertainties are also reduced, in Japan. But as we speak, most of the markets in Asia this Monday have started on a good note. We are seeing that the Japan Nikkei index has rallied to another new high, another all-time high, and that is also as a result of what the expected physical movement or kind of a policy of the new prime minister. That also have ended also for the weekend that the election that was said and he won. That also have boosted investors' confidence. We're expecting of physical spending, more physical spending, and to stimulus from the government. That have also attracted investment or buying sentiment in in Japan as we speak. The sharp fall of yen also was also a boost for Udote, knowing that it's an industrial economy, a producing economy. That I believe that has also attracted a kind of flow to that region or to that market as to speak. But if you look at what is happening also, as I speak now, I'll tell you that market, in China and South Korea, we also are seeing that because of the holiday, we are seeing low volume also in that. Hong Kong shares also are pulled back on profit taking in technology stock as to speak. But by and then, I'll tell you that the Asia market, despite some expressions on holiday, the region is having a positive sentiment as to speak. A clue for what we saw last week from Wall Street market, which is US. That also have helped to kind of strengthen the gains that we saw last week. But as investor, largely looking at the concern of the impact of government shutdown in US, which I'll tell you that by all standard that market in US have defied the fear of so the market is moving up in US. Even as of today, you see that today US market is strongly in the green, and that tells you that you can see that there's a power behind the profit behind the rate cut, and also macroeconomic data, as all eyes have seen also the delay to see the job data overall. Because of rate cut, we are seeing a lot of flow in that US market. Yeah, we're not there yet, we are still in Asia market. If you look at the focus of this region now, mainly most of the markets here are also looking up as of all taking a clue of what is happening in US market because of what? Because of the rate cut that has been, as I said earlier, I'll tell you that Japan Nikkei 225 rallied almost the highest 4.5 as we speak, to a new record high that I mentioned earlier, 48,004 on this hour, this Monday morning. I'll tell you why others are seeing them also look in that direction. Don't forget that we're seeing that another index that I said, Tokyo in the index also rose by 3% to record also a new record high of 3,232.12 basic point as we speak. We're seeing that industrial goods or industrial sector, we are the best performing in that area. I told you it's an industrial economy nation. For that, you can see that most of the industrial goods are also looking up, and also with the bet that the new prime minister also will push for more physical spending on industrialization and defense. That also impacted why financial stocks in that environment is lagging because of what? Because of the bet on what? On lower interest rate or slow interest rate like anyone. That's why you can see that I can tell you that the financial stock in that environment is not attractive for them, and that's why we are seeing that movement in that market. Like I said, on gold retreat, on tech pullback profit taking, even as Asia stock were so because of holidays in some some of the markets like China and others, but still market there is not looking bad as we speak. Also, if you look for India market also opened in the green. India market is up by 0.2 higher than the last trading day last week, coming back onward to a straight 25,000 basic point afterward, tumbling from because of the tariff issue that US will hit them and that, but now gradually I think there's stability coming back to to India market or their economy. That is also a plus for them. We quickly look at what is happening over in Europe market as we speak. No, I'll tell you that Europe market, that is where I say we're seeing stock looking slightly into the red. Why? As investors also eye another form of some political upheaval that will happen in that environment. We don't know what is going up and down. Even when elections are conducted about last year, early this year, or yeah, still we are seeing that those stock there things are not moving as expected. In France, we expect that knowing that France and Germany are the major economy in that region, particularly this morning, I think that the political or people of fear of certainty is already weighing on that regional market as we speak, and that most of the domestic market in that European zone most of them are in red because even the France Prime Minister all has also expectedly resigned, and this also and with both allies and also advisory threatening to topple his government. These are the things that also as I tell you that even the fresh cabinet and all, I believe this is why we are seeing the market can see that there's power on politics and economy they work together. Investment need an environment that is conducive and there's stability. That is why we are seeing even on that note, I see that the market there is already shaking as to speak. Well, I believe that by now there will be stability. Speak now, I tell you that the CAC 40 in France has slumped by almost 2.1%. While I was speak now, even pre-market open already you can see the volume. Also, you can see also that Japan, index. Sorry, not Japan. Sorry for that. For Germany, index is down, which is a DAS. Although index is also down by 0.2, and that of UK, which is a FTSE 100 is also down in UK 0.2 again. But I believe that banks and also in Eurozone in terms of currency also are seeing a sort of a big lagging also as a lot of what the rate cut even for recently they have been like unchanged for what that also have they were seeing a slowdown there. But still energy stocks in there have also I've seen a sign of some decline in energy stock. I'm not surprised. Seeing oil price also tumbling and also coming down. And before today, I can see there's a little kind of uptick in oil price, but before you can see that almost touched about 4 months low, and also that also was saying that we expect to see how this is going to shape also the market going to the future in this Eurozone. But I believe that investors are keeping note and also watching what is happening as things unfold in that environment. Finally, we look at what is happening in US before we come to Africa, our continent. Yes, right now I can tell that the US market, as we speak, has opened sharply in green, defying the fear of what of you know fear of a government shutdown. But I believe that investors in this area understand what they are doing, and with market watching, and extended the U.S. Government shutdown, which has led to what to delay, the key official data that ought to have guided investors. But still, investors are still going on, looking up to see their upcoming Fed meeting decision whether it's going to be another rate cut before the end of the year. And these are what is happening, even when they are seeing some of the White House or officials warn and also massive federal layoff. All these are things that the market, but as we speak, the market in that environment is still. I believe that the deal between the Republicans and the Democrats, to reopen the government remain very skeptical. I believe that let's wait and see at the end of the day. But the good news is that the market have defied the government shutdown. Market is looking up. And also don't forget that the latest quarterly earnings for those that has the calendar, the fiscal calendar of January to December, we expect to see third quarter, and that also is part what also investor in this domain is also expecting. That also is reflecting on the market as we speak. Right now, I can tell you that US market is still climbing as investors kept up on the ongoing federal shutdown in Washington, and await both the Federal Reserve interest institution also to arrive at what the third quarter earnings season this month. As I expect this arrival of third quarter earnings season, we expect this also to shape the market, just like what we are seeing in most of the African country, continent or country right away. I can tell you that Dow is up by 0.2 and S&P also that up by 0.3 and NAFTA is also up by 0.4 in US. Good one for the market. The main averages of US market still remain volatile, extending on the same pattern that we saw on Friday in this market as we speak. But for me, investors in this environment also should pay attention to information anytime, any day. But I believe that White House have warned of potential start toward mass layoff or federal layoff because if government go ahead and shut down, and that also is what also be considered by the by those that involved, especially the upper house and the lower house of US, although they also know what to do. But tell you that as all eyes are on earnings, quarterly earnings, we expect to see more going to the week and into the month. I believe that that also will also support any market as we speak right now. Also, don't forget that after the announcement of the female prime minister for the first time in Japan has also helped to help Japan to lead the market performance in Asia market as we speak. But I believe that also is also a good thing. Now, I hope that in commodity market, we expect that the uptick in oil price, after a smaller than expected, OPEC output hike was announced. We believe that that also see how it's going to also help the market. But I believe OPEC have taken a good decision not to increase their product about 139,000 barrel per day, in November. Watching what the increment about October to see how it's going to. Let's wait and see whether this is what is shaping the commodity market. And I believe that a weaker dollar will also support also the commodity market because that's the consumption. For low price of crude oil has also been a plus for many. That's why if it is sustained, we're going to see also low pressure on inflation and mature economy. To come to Africa, I'll tell you that African market, most of the market in Africa are in green as we speak. Down to NGX right now. NGX have opened the first trading day of the week on a sharp gain. Looking up for me, it's a good time to say yes, our market is really recovering. The buying heading toward to break out the last top about 146,000 mark. But once the market look to cross it, a new trend also say has set up in the market. But market is already forming a double top already as we speak now. We need to watch if the market is able to break out this top now. That will also be another movement I would expect. I believe that as all eyes are still on macroeconomic data, especially inflation figure for the month of September and also earnings, this also determine where the market will go in ahead of another MPC meeting in November, which is the last one for the year. But I believe that this is the time also for investors in the market to start doing the work called portfolio reshuffling, either sector rotation. This is the right time to do that. And that's why our topic today is it the time for sector rotation or rebalancing on NGX? It's a question. We want to look at it together before we call the class today. But let's finally look at the market data of NGX right now. As we speak, NGX is in green. If you look at the chart here, you can see that we're seeing a bigger candle, more than what we saw yesterday. You can see this is a higher one. You can see the rate of movement. We're seeing that in the last 2 days, we're seeing a faster movement in terms of gain compared to what we were seeing when the market was coming down here. Also, when it was coming down here, we're seeing market recovering. Let's see how far it goes. But as we speak now, market is doing 144,339.78, up by 655.74 basic point, representing 0.46% in the green. For me, it's a good one. The market range at this hour, market has opened from 143,584.05, touching as high as 144,248.98 before sliding down to the figure I read earlier, 144,339.78. Good one that we are seeing a positive, strong market break, and this is saying that yes, we are seeing increasing buying strength. What I mean that we are seeing a positive sentiment in terms of momentum. We are seeing that 33 stocks are on the gainer side as we speak, while 15 is on the decline side of the market. And good news that investors at this time are watching what is happening, are looking clearly what is happening in this market. It's very, very important that you and I also should not look away from the market at this hour. This is the right time to see what is happening and also pay attention to it. As we speak now, consider that the top gainers part of why consider the Ella Lake gaining almost 9.95, followed by Julius Berger 9.93. You can see charms also in that Ghana top 9.89. You can see the sovereign trust insurance and also that communication 8.7 as we speak. Then on the loser side, flip side, we're seeing that MC Nichols is also down by 8.3. You can see livestock down by 6.33. International energy, we're seeing also ICO and special capital down by 4.7 and 4.3. This is the state of the market as we speak. Yes, we're going to look at before we come on to back to the chart. We're going to look at our topic today, which is sector rotation. We want to see how is it the time? Is it time for sector rotation and portfolio rebalancing on NGX? Yes, I'll tell you this is the right time for you to do that, especially as we're expecting to see what earnings season kicking off anywhere from now. From mid month, we're going to see that's from 15, and that's the period also we're expecting to see the inflation figure. Once all this comes, we're going to give more insight and direction to the market. But at this time, how will you do portfolio reshuffling or sector rotation? We need to look at how many sectors do you have in the market. What is the performance of these sectors as we speak? That will help us all to know exactly what to do right away. And that's why I have this page here, for us to see. You can see that looking at the quarter to date, looking at the year to date and week to date and month to date, to see which sector is where you will keep proper attention right now in the market is very, very important. Yes, if we start with the Usher index, Usher index is almost all by that is for measure the market performance to see what all the market stocks on the exchange represent. What for the main board, what they also. But for us, we're looking at sector. Yes, when you talk about the 30, NGX 30, you're talking about the heartbeat of the economy of the market. That I see that year to date, that sector has that index have returned about 37.33%. Then also look at the banking sector. What is the banking sector? The banking sector year to date has returned 40.77% year to date. I'm going to tell that already today is the 6th day of what of October. I started 3rd of October. That is this figure we are reading now. You can see year to date, and this is the last quarter of the year. And we say that the last quarter of the year is the most active quarter. What are we expecting? If there's another rate cut in November, there's going to be additional flow of fund into equity space where liquidity in the system will improve and the market will improve. And what also we're expecting from what the companies that are also the price have rallied at their earnings also are looking up. Are we expecting to see a better payout at the end of the day? These are the things that will guide us to do our rotation, to settle, and also want to look at how can I replace our portfolio? I would put a line company that are still the laggards in the industry where they are, or the leaders, or those that have good dividend policy that can also help you to replace your portfolio. And this especially as numbers that will come from Q3 will open our eyes and give us insight what we're going to see at the end of the year. Knowing that the last quarter is going to get activities that also impact company performance. These are things that should put at the back. That's why this economic event has a way of shaping the market. And we have seen our GDP, we have seen a lot of activity, both monetary policy dividend, outcomes from the first one, second one, this last one they did, and also these are the things that will shape the market as we speak. But now we're saying that yes, for the banking sector have returned 40.7%. Then we now look at what are the insurance return. Insurance has returned 68.9%. Then you can look at other indexes there. We're looking at the sectorial fund. Then look at also consumer goods. Consumer goods have returned 96.42 as we speak. Why the oil and gas also is on negative return market, on a negative return for the oil and gas. Then look further to see what is the return for industrial goods. For industrial goods about 42.17. You can see that there's still potential in some of these sectors to know. But what you want to lay your hand to see where will I be. Then look at these companies' P ratios to see what is the average P ratio for the industry, and which of the company we're going to pick is what is above the average of the company. That tells you what to do at this hour or at this moment as we expect to work to do our carry out our sectorial rotation. Then picking all your balance here, the balancing of your portfolio. Yes, you know that stock that has defensive nature, good stocks that you want to target, those stocks that also are good dividend paying and also have defensive nature should also be in your portfolio as we speak now. And this is why I will show you this stock. You can see year to date of this company and which one has the upper that are all of them, most of them have performed the market itself. Why apart from the oil and gas is a negative of 4 points, I will tell you that others are more have surpassed the low. That means if the market move further here with most of the high cap stocks moving up, we expect the index to go up. But these sectors in the indices is where you pay attention to give insight for what to do. And also, if I say that the heartbeat of the market is below what is below the market in terms of performance, then that there's those stocks in that NGX 30 that have potential to go up, because there you see the companies that I believe that they are the stock that yet we should not look away from. If you really want to take advantage of the market movement, you must pay attention to those stocks in that NGX 30. They are very, very important for every investor to pay attention to. Yes, for me, when it comes to rotating your portfolio, there are things I don't share things that there's basic things that you need to know that also will help you to make that rotation very, very important. Yes, stocks are many stocks have hit a new all-time high, and also or making new all-time. You need to also review your position. Which of these stocks that have gone far, how far will they go? Then look at what are they, those that are hitting the all-time high, those that are also selling 50% below their all-time high, 50% below all-time high, and that's why you must also look at those stocks. Is very, very important. Now that you have seen that the sectors have different performance, and like I've shown you in the table I just showed you from NGX, but you know that in our market we have about 13 subsector. We have the banking sector, we have the agricultural sector, we have the industrial, we have the utility, we have also the financial service, we have insurance, we have the basic the healthcare is there, we have the real estate there, we have a conglomerate. All these are there in our market, and you must know which one you should pay attention and where you should also look at. But the basic reason for you to do your share sector rotation or foreign plan is because market moves ups and down, and this up and down is what creates opportunity for stock many. And as the market is climbing down, many of the stock we are holding, also the last stock, most of them also are large percent of your portfolio. You need to reduce your diversification so that also you can increase so that you can reduce your what, increase your risk or reduce your risk. It's very, very important. Where you see that yes, stocks you are entered otherwise are looking down. You want to also make sure that also you short your position to enter those that have value, that even they pull back and create opportunity for you to buy is very, very important. And also, what are the economic events that will change the market in going to the future? You must pay attention to those economic events that will change the market when the market continue to work to look. That's why you must also use your what we call a calendar approach when you are doing your portfolio reshuffling. That's why our earning season is very, very important. At the end of the year, those seasonalities, they are very, very important. This calendar approach will help you also to report the portfolio ahead of what? Ahead of an event that will trigger their prices. That's why we have quarterly earnings, we have a year earning. These are the things that also help you to work to do your. Also, what happens is that you need also have to reallocate your assets. Asset class is very, very important. What percentage of your investment should be in stock, what percentage should be in fixed income market. This one also help you to know, oh, am I going to increase my large cap position, or I want to enter low, medium and low cap stock. All this will help you also to know exactly what to do when it comes to what portfolio rebalancing is very, very important. Identify also the large allocation where you have a 20% in your portfolio. Where is your 50%, 5% share to or you need to know. Or is the example that we want to leave 40% of your money in your fixed income instrument, and also allocate 60% to what to equity market and also. But now that we're saying that the interest rate is declining, is it time for you to also have about almost 40% in fixed income asset? Or you need to know, is it able to take calculated risk and also stay in the in the equity market and make money? As far as that the economy is improving, we're about to see also more positive number that impact the company's performance. That at the end of the day, you know what to do. This is why you should have it at the back of your mind, because it's very, very important to do your assets positioning at any given time, especially when it comes to looking at earnings and also seasonality. It's good to know where to position and position right before any other thing, and that is the only way you can stay ahead of the market. That's why I said, is it the time for you to do your work, the positioning in the market? You must also know the right time to catch in. But timing and time is very, very important in equity investment or investment generally anywhere in the world. That's why you must pay attention to what is happening in the market where you play, so that you will not be left behind or catch unaware. You must follow time, follow approaches, follow seasonality to also to make money in any market you are trading. Yes, back to the market. Let's look at our charts now to speak. No, I'm talking about market forming a double top right, at the same time we are coming in. But if you look at the chart today, there the chart have formed what we call a inverted head and shoulder, and it has broken out the neckline, which is here. Because after breaking out the neckline, you can see that the market have extended the up rally, but now coming to form, what we call a double top at this point here. You can see it here, a breakout of this point also coming, but I tell you, market is ultimately targeting at this point. That's about I told you that for 146,385. When market break out this function, that to this point, this resistance price, they also call the top here, then a new trend will continue. But right now, market is all forming double top almost at 444,283 as we speak now. But a breakout of this place will also, you can see here, it's also good. No momentum, but the volume at this point, I can see the volume on Friday and the volume today are lower, are below the average traded volume for the market. But let's call online indicators that will help us also to take decision straight here. Yeah, let's call other indicators that also will look at to give us more insight what the market is doing now. Yes, we don't play with our money flow. Also look at our MACD and the one that gives serve as for resistance and support level, and also the one that gives us signal to buy or signal to sell is our T line. Change the T line to what? To our T line to what? Our T line to 8. As to speak now, you can see that we are saying that EMA is what? Is 9. I want to change it to 8 now. I want to change it to 8 so that we can continue our discussion on the market. These are one thing that when you are using all this live chart that is on the website, you can see that it's not opening, it's not changing as expected for us to change. Let me drag it try to quit the button. If not, I will use the 9. Okay, the 9 enemy to discuss. You can see that this blue line is supposed to be 8, but we're using 9 because of the fail to change here. But you can see that it's serving as a support level when the market is trending up, and that's about the resistance when the market is below the T line. But good news that the market, after forming in fact, head and shoulder, it has started trading above what the T line. And that's that at this point is the people are seeing as a resistance double top here. Any breakout at this point, I think market any breakout at this point as we pick now, market has entered 144,303.52 as we speak. Market is still going up even when the volume is not increasing, but we can see the market is going up. You can see it here with the chart. But look at the volume here. But good news that I said that money flow in the market is still up. I already now almost 74.58. It's a good one, even though it's slightly looking down here. Also to reflect this low volume here. But the good thing is that MACD is already a bullish MACD. That means the market, the red one, the blue one across the red one up. You can see it up here. You can see that the blue one is up. For me, it's a good one for our market right now. That is strength coming back to the market, and that's why we're seeing that the index action is above what? Above the T line. But quickly, because of our time, to have only just 2 minutes here to let's quickly look at other stock here. Let's pay attention to see what is happening to PZ. Is the momentum over? Let's see. Is it place to watch? Let's see. I will tell you that yes, this morning it has gone as high as almost this is a day chart, it has gone as high as almost 44, but we're seeing at 42 now. Is it profit taking? Yes, I tell you that yes, you can see volume coming out here, but following the volume this morning, I can see that MACD is very, very sharp. Bullish on the stock. Our fund is still very high in the stock, reading around the 97 for me at this point. If you look at 1 hour chart for the stock, it was in the last 1 hour. I can see that it has been over, but I can see that it also trying to resist the decline at this point because people are trying to take profit and it's expected. And MACD also is already declaring that histogram said that it's slowing down when MACD is also becoming wider here. For me, it's having a bullish MACD for PZ. Also for those that are there and those that want to take position and wait for what their Q2 result that comes in November. Also how to watch. We could look at what is happening in CWG, and that will be the last we'll do for today to call it a day. We have seen Cham looking up. I see that CWG has also today is now almost at 17 naira now on the 1 hour chart. Try to resist there. You can see it's up. It was down before it went up. You can see it here. Money flow is very strong. Reading 68, that's almost 70. MACD is still bullish for the stock on the 1 hour chart. But if we go to the day chart, we'll get more picture there. For the data, you can see that the data is still at 17 naira as we speak. From money flow is relatively low, below 50, around there. But 36 looking down, and MACD is still what is still bullish for what for CWG. For me, this stock is still very rough stock to look at, especially as far as on the Q3 number. On this note, I'll say thank you for my time is fast spent. See you on Wednesday, hopefully by God's grace. Bye.